Enphase Energy has been a phenomenal growth stock over the last 5 years, but shares are down 58% from their 52-week high, and they're down even more than that if you go back to the 2022 peak of the stock. Now, the company still has a phenomenal position in the solar market, but there's been a lot of headwinds that it's faced, and there's a reason that shares are down as much as they are over the past year. The question is this the bottom for the stock, and is there going to be a recovery in the future for Enphase Energy? I think that could be the case, but I'm going to go through not only what has happened, but what you need to watch over the next couple of months, because we're going to see some signs in the next earnings report as to whether that recovery is on the horizon. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Go to fool.com/ASYM, and then you'll get their top 10 stocks to buy right now. So let's just go back to the growth story that is Enphase Energy. And this chart right here shows how phenomenal the company's growth has been over the last 5 or 6 years. You can see that 2018, the company generated $316.2 million in revenue. That jumped to a phenomenal $2.7 billion in the trailing 12 months. At the same time, Enphase has been extremely profitable. You can see that $572 million in net income over the past 12 months. But there's a reason that the stock has fallen. This first chart is all annual numbers. So if we look at just the quarterly numbers, you can see that there has been a rapid decline in results just over the last couple of quarters. And this is going to get worse before it gets better. Revenue peaked at $726 million in the first quarter of 2023, now down to $551 million in the most recent quarter. And let's get to what they expect for the next quarter. This is Enphase's guidance for the fourth quarter of 2023. You can see that revenue is expected to be $300 to $350 million. Remember, revenue peaked in the first quarter of 2023 at $726 million. So we're talking about more than a 50% drop in revenue just over 3 quarters. So just a rapid decline in the business. Gross margin is expected to be pretty high, in the high 40% range. Even on a non-GAAP basis, we're looking at close to 50%. So that is one bright point, that it doesn't look like Enphase is giving up on price, even if it is losing revenue in the process. Now, the challenge here is that revenue is not going to pick up quickly in the first quarter. At least it's not expected to. Every company in the solar industry is expecting not only the fourth quarter to be weak, but also the first quarter, especially these component suppliers who are beholden on installers, particularly in the residential market, to actually start picking up their business. Well, that doesn't typically pick up in the winter months in North America, in Europe. So that's why we may see a delay into the middle of 2024 before we start to see revenue start to pick up again. I don't know if we're going to get back to that $700 million range anytime soon. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, as rough as results have been for Enphase over the past couple of quarters, and as bad as things are probably going to get in the fourth quarter and the first quarter, we can see when things are going to likely start to improve. And there's a couple of reasons for that. First of all, rising interest rates had a huge hit on the residential solar market, and that really peaked when numbers were reported for the third quarter of 2023. Since then, the 10-year rate, which is a proxy for the kind of borrowing rate that these companies are going to get when they start selling future cash flows, that rate has come down by about a full percentage point. So borrowing costs are coming down. That means it should be more economical for a lot of these installers to actually put assets in the ground and on people's rooftops. So that should help open up the market a little bit. The other thing is that utility rates are rising. And this is something we've seen across the board. Rates jumped in 2022. We don't have the full data set for 2023 yet, but rates are expected to increase again in 2023. And there's a lot of utilities looking to raise rates again in 2024. Same kind of dynamics are happening for utilities that were happening with solar companies. You have higher labor costs, higher interest rates, and that all eventually flows its way to higher utility rates. So that should make the competitive environment a little bit better for installers as well. But the reason that this will take a little while is what installers are doing right now is they're reducing their inventory. So they had expectations going into the second half of the year that there was going to be a lot of growth in the market. Everybody said this: SunPower, Sunrun, Sunnova. Everybody expected the second half of 2023 to be a really strong period of growth for the rooftop solar industry. That just didn't end up happening. So you have orders that you're putting in, expecting that growth in the third and fourth quarter that doesn't materialize. Suddenly you have excess inventory. So you reduce your orders, and that hits companies like Enphase in the fourth quarter and the first quarter of 2024. But eventually, they're going to have to line up with how many installations are going on. And we're not seeing a massive drop in installations at the endpoint, at the customer point. So there's going to be basically a catch-up period where inventory is going to reduce, and then they're going to have to pick up their inventory purchases. And it doesn't appear that Enphase is losing market share. You see that partially with the price that they're able to command in the market, still have really high margins. We're seeing SolarEdge actually be in a little bit weaker position from a volume perspective. So I think Enphase is in a really solid position in the market, but we're playing with these market dynamics that are really outside of the company's control. And it's going to take into potentially the third and fourth quarter of 2024 for things to really turn around. The other thing to watch that could potentially help Enphase grow is moving into more and more products. Enphase really has grown on the back of these IQ micro inverters. So these are inverters that sit on the back of each solar panel. There's a lot of tailwinds behind that because a lot of module level power electronics, in which a micro inverter is, were mandated in a lot of places around the world. So you have to put either micro inverter or a power optimizer. That gives a ton of tailwinds for a company like Enphase Energy. And now you become the brains of the solar system. So now you move into the combiner, the control system, the battery, all of these other components that are interacting with the grid, with heat pumps, with all kinds of other systems in the home, and even electric vehicle chargers. That's something they mentioned over here. There is an IQ EV charger as well for the home. So putting all of these pieces together is really what every company is trying to do. But Enphase has an interesting position because they're already the brains of the solar system. So why don't you just extend that to a lot of these other components? I think if there's huge upside for Enphase in the future, it's because it generates more and more revenue from each installation because of exactly this dynamic, moving into more and more products. Now, that's the bullish case, and that's where I think we are headed. I think we are going to see a recovery in these installers first. We're going to see them start to say that the market is opening up. Maybe their margins are improving a little bit, and that's going to be the first domino to fall. Next will be companies like Enphase who are supplying those installers. But the one thing I want investors to watch in 2024 is what happens to pricing and margins. Enphase has been in a really strong position to command very high margins, very high prices for its products for a very long time now. And we have seen a lot of these installers, particularly Sunrun, say that they're expecting component costs to come down in 2024. Well, the biggest component cost that they have is inverters and power optimizers. So in Enphase's case, you have the microinverter, and then they're adding all kinds of other components. So they're going to try to put pressure on their suppliers, and that is companies like Enphase. That's ultimately what I would worry about, is that we get back to that $700 million revenue run rate, but instead of having a 45 or 47% gross margin, now you have a 35 or 37% gross margin. That would really impact profitability. So I do think we are starting to see opportunities for a future recovery in companies like Enphase. I love the capital light model. They have a very good balance sheet, very valuable position in the market. It's absolutely possible that the stock falls further from here, but I'm considering starting to accumulate shares of Enphase in anticipation of that recovery that's going to happen, likely starting in the middle of 2024 and into late in the year. I think we're going to see a lot of revenue growth in that period of time, and hopefully you see margins stay high as well. So what do you think about Enphase's position in the market? Stock has obviously taken a huge hit, but that could be a buying opportunity for long-term investors. Love to hear your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.